In a little over a month, um, the United States is going to do its presidential election, something that happens every 4 years. And what I want to do is review the last 4 years, because one of the things that I see happening over and over and over is people have a filter. And the filter they use, the filter they've been taught to use, is hurting them. And if you switch that filter and change that filter and get trained to use a new filter, you actually have a much better performance. So let's look through a bunch of price charts here. I'm going to start with the S&P 500. Every price chart you look at, unless I say, includes dividends reinvested. And every price chart you look at here is going to be 4 years in length. So we're about a little over 30 days from the next presidential election. And this is a weekly price chart. So it's not going to have as many jigglies and jagglies black line. It's just going to show you the closing price of each week. So if you notice the price chart looking kind of smoother, that's why. So here's the S&P 500. We're not quite the November, meaning it's 4 years, but S&P over that time period is up 68%. So the S&P is up 68% over the last 4 years. Now, the reason I'm doing this is to impress upon you the power of price and the power of understanding how to read price and read price charts and lean into price charts and have that be your first filter. So from the S&P 500 point of view, 68% increase over that 4 years is pretty good. Now here's emerging markets over the same 4-year period. Doesn't look as nice, but still it's up. Let's just see what it's up. Emerging markets is up about a third, 28%. Okay, maybe it's getting close to a half, but amazing. And the reason this is so impressive is because I don't know about you, but haven't you been hearing how undervalued emerging market is and how you've got to get into emerging market and the PE ratio is so much better in emerging market? And one of the powers of understanding how to use price as a filter is price will just tell you, okay, that's great that emerging market is cheap, but is that what's going to be best for my money? And the answer is no. Here is Europe right here, looking at Europe, just standalone Europe. And let's see what Europe's up over the exact same 4 years. It's up 21%. So, I mean, this is crazy. US 68%, emerging market 28%, and Europe 21%. I mean, very, very different experiences over the last 4 years. And then if we start to, I mean, we can slice and dice the world. I mean, China, this is Chinese stock market right here being measured by FXI, which is a China large cap ETF. It is priced in US dollars, but let's see what China is up 22%. So not that big a deal. Let's go to the big one here. Technology over this time period is up 160%, 160. Now, again, a couple things that are interesting. I was reminded of this and I forgot that when Trump was elected in 2016, I remember reading stories that energy is going to do so well and financials are going to do so well because regulations are going to go away and those sectors are going to absolutely crush it. So here's energy right here during the last 4 years, and energy is down 47, 48%. Guys, this is dying. This is dying. It represents maybe 2.5% of the US stock market. And if we look at financials, let's look at financials here. Financials look better than energy. Financials are up 35%. But again, that's about half of what the S&P 500 is. Again, the point of me showing you these charts, and I'll show you a couple more, is that it's not just showing you a black squiggly line, right? It's knowing how to use that as a filter to say, okay, does who gets elected? That's probably not sounding right, not even to my ears. Does it matter? And the problem is you're taught to look to news to see if it matters. And I believe you should look to price to see if it matters. Healthcare, what did healthcare do over the last 4 years? Not bad. Visually, it looks beautiful. Let's just see what healthcare has done. Now, the S&P did about 68%. Yeah, healthcare underperformed at 56, 57%. So that's pretty impressive. And then let's just look at the general bond market. So the bond market over the same 4 year period, let's just look from a price point of view, was up 16%. And so this is something a lot of people don't understand. They don't know that price can go up with bonds and price can go up with stocks. So yeah, the stock market in the US went up 68%. The bond market went up 16 or 17%. They both went up. Now, obviously, the stock market went up a 4 or 5x that. And then we have gold. I'll round it off with gold and maybe one or two things, and then I'll tie this up. And here's gold during the last 4 years. Gold is up 40%. So you can, and then when you look at the price chart, you can see the first half of the price chart, call this kind of the middle of it. Gold really didn't do anything. It's actually been really the last 2 years that gold has done something. And so as you go through the world, and I'll just bring up the total commodity complex. This is commodities all together. It's kind of like the S&P 500 of commodities. You can see over this time period, commodities themselves are actually down 10%. And I've talked a long time about how people who sell the all-weather portfolio have people put up to 25% in commodities. And again, that's very, to me, rigid thinking. And what I want people to do and get trained to do is to be more flexible in how they think. So as US elections are upon us, it's again, whether whoever gets elected, right? It's a good time to reflect and look back and go, okay, there was lots of angst and lots of anxiety that got put on people, but it didn't have to be that way, right? Many people got scared out of the market and went to all cash, and they missed out. Even bonds going up 16%, let alone the US going up 68%. That all cash, they were scared out of that because they were told to be scared by the filter they're using. And that's why price can be so powerful, because I want to say it's agnostic, but it's not attached to the words. It literally collects the votes of that 4 or 5 or 600 million people and collectively takes the vote and goes, okay, this is happening, and the market is still going higher. And I'll leave with kind of one last one. This is the all world index. So this is every stock market on the planet: developed, emerging, frontier, large, small. It's all of them. And yeah, obviously, there's this really big thing here at the beginning of 2020. But still, let's just measure this from a worldwide point of view, up 46%. Very jagged, very scary. But again, collectively, the world, what do we have? 600 million, a billion people in the stock market. Supposedly about 10% of people represent 90% of the stock market. So if there's 7 billion people, that means there are about 700 million people voting on this price chart. I'd have to say to you, I would take the vote of 700 million people over a CNN or a Fox or any sort of news channel, any sort of pick a month, but to take the voting of those 700 million people. And again, this includes the US and Europe and Asia, emerging, frontier, all the markets. And so I guess the thing I want you to take away from this week is that there's a power in price charts, and knowing that there's a power in price charts is not enough. Listening to me talk about it is not enough, but really understanding how to get under it and have price be your filter. It just allows someone to lead a much better life, to know that they're going to have enough, to know that they're going to be okay, to know immediately, literally in seconds, am I okay? That news thing just came across. Let me go look at the 700 million voters and see if they collectively think it matters. Now, I don't mean matters for like your family planning or your political point of view or whether you believe in climate change or not. I'm not talking about all that. I'm simply talking about your portfolio, the amount of money you have in your portfolio, right? Because $2 million gives you more choice, right? If you have a $2 million portfolio than if you have a $1 million portfolio. A $5 million portfolio gives you more choices than if you have a $500,000 portfolio. So literally, I'm just talking about the performance of your portfolio and not what person or what ideas are better for the world or for climate or for family planning. I'm simply talking about the price and performance and you knowing that you'll be okay. Thanks so much, guys. Please go ahead and subscribe and like to the channel because it helps. And also let me know what you're thinking. Like, do you agree? Do you disagree? If you disagree, put it in the comments. I read every comment, or you can just email me, rc@fearlesswealth.com. I read all of those and I collect those questions and then I will kind of put together and ask me anything. So thanks for being in my world and I will see you guys on the next video. Okay, bye.